Head on over to the front page of TFNN, right under the newsletter tab. You can check out the Tiger Forex Report. Teddy's got a couple of outstanding webinars under the services tab as well. Check those out during the holidays. You got the time. They're great webinars. And let's get into it. Teddy Kekstadt, good morning.
Good morning, Tommy. We finally got a connection.
I'm happy to hear it, man, because I know we were texting yesterday, and it's Fed Day, Teddy. Like we said, we've that conversation, we can touch on it, but I think the market's expecting a cut, and boy, 2025 is going to be an interesting one, though, in terms of where we go. We got a new administration, and the Fed's going to have their hands full fighting through this. We know that. It's an interesting market, but I know you got some predictions, man. So what are we going to look at? What do you want to kick things off with as we come into 2025?
Well, right now, I think we're going to have screaming inflation going into the first quarter.
Oof, okay, here we go. I like it. Let's hear it.
So, I'm a commodity guy, and I was checking out the grains and the meats and some other commodities, and you have things like coffee to begin with. I'll tell you what, in 2025, I bet you're going to be paying more than another $1 higher for your whatever double decaf mocha, whatever grande or whatever you have from there.
My latte. Get away from my latte with those high prices.
Sorry, man, but you're probably going to see $1. You're probably going to see $1 bump in price soon.
Okay.
So, I mean, you look at these charts, corn, cocoa, coffee, sugar, all these raw commodities, they're exploding. They're going way too high for this time of year. It's not like we don't have seasonal issues that are the issue. There's not even growing capacity that's the issue. There's transportation costs obviously are high, but that's not what's driving these things. So, and I think that as you look at that, you could probably see an acceleration in food prices going into the next 3 to 6 months. And if you don't see acceleration in prices, you're going to see more shrinkage in what you're buying. Every consumer is aware that what you bought, even just a year ago, the box may be the same size, but what's in it is not. So the weights are going down. So whether you call it inflation or whatever they want to term it, it's here and it's not going away. So the biggest thing is, will the Fed continue to cut? And I think that's something you're going to have to really watch, especially with the economic numbers, because no matter what, it's going to go against their narrative. And we know that Donald Trump wants them to definitely lean towards easing, which, to be quite honest with you, it's not about just his idea. I think really what it comes down to is he wants to correct the idiocy that happened over the past 4 years when it came to financing with the Fed. I mean, we have too many short-term liabilities financed, or long-term liabilities financed with short terms. So, and we need to get that taken care of.
That would be nice. Can you hang with us? All right.
Yep.
All right, stay tuned, folks. We're coming back with Teddy. We got the S&Ps off by 2, NASDAQ off by 51. We'll talk a little bit more commodities. We'll talk some inflation. We'll be right back with Teddy. Don't go away. Welcome back, folks. We got the S&Ps up by 1 right now. We're talking to our man Teddy Kekstadt, and we're talking some markets. So it's interesting. You look forward ahead, Teddy, in terms of potentially inflation, food prices. I was having those conversations with my mom recently as well. We'll see where the Fed goes from there. It's interesting where they are priced right now. So would you think that we get surprises in terms of maybe some higher yields as that persists next year when that carries in? Or is that just going to see where that lies beyond the next 3 months?
It's funny you say that. We are on Fed Day, and look at where the Treasury bonds and the 10-year notes are as opposed to where they were when they first started cutting rates a few months ago, right? Yeah. Yields have not, they're actually right there. It's kind of funny. I've been talking to people who are in the real estate business too. September, they're like, oh, the Fed's cutting, people are going to be buying again and what have you. Oof. I'm like, I wouldn't bank on that one, and look at the spread between what's going on now with the Fed, and they're going to cut again today. And here's the other thing is, now people are going to question what is the expectation of them cutting into the new year. And how much will they cut? And I'm saying, if I'm right with inflation, these numbers, if they start coming to hit over the next couple of months, you're going to see the Fed be on a pausing basis at least. And that bias is something that you got to look at the new administration. They're going to be like, come on, cut. We got to fix all this damage that's been done. We have to pay for it too. At least cut the cost of the damage, right? That's not going to happen. It's just not going to happen. And what if we have an uptick in oil? Even though they're going to turn the pumps on, okay, so oil stays stable. Let's say that does occur. We still have the things now that your transportation costs may level off, but that doesn't change the fact that the actual products now are going up. See, before we had transportation costs driving inflations, things like that, supply issues, what have you. Now it's going to be the opposite. It's going to be shortages.
You know, Teddy, and we got to go. I say a gallon of crude is like under $3, and a 20-ounce bottle of soda is like $2.30. I can't grasp that those stay that close. So maybe we get a lift. Teddy, thank you so much, man.
We'll
have a great Christmas, New Year's. I appreciate it as always, and we'll talk to you in 2025.
Take care.